The content in this video is for general educational purposes only and should not be used as a substitute for professional advice for your unique business situation. Please consult directly with the local governing authorities and/or qualified professionals in your region before making any major business decisions.
This video is going to focus on the key steps to starting a business in Saskatchewan. So the topics that are going to be covered in this video include the trade-offs and requirements of starting a business, planning and researching to prepare to start a business, choosing a business idea and a legal structure for that business, choosing a business name and location, determining startup costs and funding options, registering and licensing the business, sales tax and income tax, accounting, bookkeeping, and insurance, employees, payroll, and workers' compensation, and lastly, advertising and additional business resources. So when it comes to owning a business, there are trade-offs. There are advantages, there are disadvantages, pros and cons. So some of the advantages of owning a business would be things like the opportunity to create a lifestyle that you want. So do you want to work kind of regular business hours, Monday to Friday, 9 to 5? Do you want more flexibility? Do you want to be able to work remotely? Do you want to be able to take more time off? Maybe you want to be able to leave work early to go pick up your kids from school, or, be able to work from different countries at different times of the year. So that's one major advantage of starting your own business. Another advantage is the learning experience. You might be really good in your field or at a trade or the profession that you're in, but when you start a business, you're going to learn plenty of more things. You're going to have to learn about the things covered in this video: insurance and bookkeeping and payroll and sales taxes and legal structures and things like that. So if you're the type of person that likes learning, starting a business is going to be a great way to learn more. Another advantage of starting a business would be sometimes you get some extra tax deductions that you can claim, and then some extra tax flexibility, especially if you're starting your business under the legal structure of a corporation, which will be covered shortly. Another advantage of starting a business would be the control of decisions. So you get to decide, do you want to start this business from scratch? Do you want to buy an existing business? Do you want this to be based in a larger center or a smaller town? Do you want to work remotely? Do you want to grow it or just kind of create a career for yourself? So you get to decide these types of things. Another advantage of business ownership and starting a business would be growth opportunities. As an employee, you can get a raise, you can move into a higher role, getting a promotion, you can maybe move to another company. There are growth opportunities as an employee, but as someone who's self-employed, who starts a business, the growth opportunities are pretty much limitless. There's not really a ceiling. It could be just a business for yourself where you're kind of creating a career for yourself, or you could hire an employee or 2 or 100. You could have one location, you could grow it to 50 locations. You could be in one region, one province, or multiple provinces or multiple countries. So there's really no ceiling on how large you can grow your business and how much growth opportunity there is as a business owner. And now another advantage of owning and starting a business would be that you're going to form new relationships. So that could be new relationships with your customers and clients, could be new relationships with your service providers and suppliers, maybe, professional services like accountants and bookkeepers or suppliers for materials, maybe just with other business owners, maybe with business partners. So starting a business is actually a great way to form new relationships. And now this is not an exhaustive list. There are other benefits as well to starting and owning a business, but that's just a brief summary of some of the main ones. And on the other hand, there are disadvantages as well to starting a business. Just like anything, there are trade-offs. So some of the disadvantages of starting and owning a business would be things like it can be risky, especially if the business you're starting has high startup costs where you're having to, pay for renovations at a commercial space, or buy a vehicle, or buy equipment, or if you have to walk away from a job that's paying you really well and has good benefits. It can be risky, and it really depends on the business. Some are a lot more risky than others, but pretty much no matter what, you're taking at least a little bit of risk when starting a business. Another disadvantage of business ownership is that it can be more work and more stress. Of course, working as an employee, you have work to do, but when it comes to starting and owning a business, there's just more you have to be aware of. You have to make sure that sales taxes are filed and business income tax is filed, and that you have an insurance policy, and that you're staying on top of payroll and maybe dealing with your employees and dealing with suppliers and things like that. So there's a lot more that goes into it than just providing the product or providing the service that your business offers. There also is more responsibility. Oftentimes as an employee, the work is brought to you. You don't have to go out and find that work. You're not responsible for some of the things that I mentioned, like insurance and payroll and things like that. So as a business owner, a lot more things fall on you. Of course, you can hire people and delegate some of those responsibilities, but ultimately you're the one who's going to be responsible for a lot of those extra things that you probably wouldn't have to deal with as an employee. Another disadvantage of business ownership and business startup is that it can be expensive. Again, depending on the business, some businesses can be started for a small amount, but other businesses, think like if you want to build a car wash or start a car dealership or open a restaurant, they can be quite expensive, not only to start out, but to operate continually. Another disadvantage of business ownership would be sometimes it can be inconsistent and uncertain, especially starting out. You're going to have some uncertainty as to whether it's going to go the way that you hoped. You might have inconsistency in terms of, suppliers and revenue and finding good employees, and you might have some seasonality and things like that. So there is going to be some inconsistency and uncertainty, especially starting out. And then lastly, it can create relationship issues. So while owning a business can be great for building relationships, it can also harm relationships. You want to be careful with who you get into business with and how you navigate that. You don't want to harm relationships because of the business. Of course, that does happen sometimes. So you just want to be mindful of how you navigate that, because you don't want to hurt long-standing relationships that you've had in your life by getting into business with the wrong person or just not navigating it appropriately. Now, when it comes to the requirements of starting a business or being a business owner, of course, there are some requirements. Things like education and training can be really valuable. But the most important takeaway here is don't feel like just because you don't have a master's degree in business that you can't start a business, because you can. There are plenty of businesses that you can start without having a high level of education, especially institutional education. A lot of the biggest businesses that we know, at least in this part of the world, were started by people who did not complete post-secondary education. So don't feel inadequate or deficient just because you don't have all that education. If you do, that's great. But again, you can start a business without having a degree or a master's degree or PhD. Now, of course, if you're wanting to start a business where maybe you're starting a dental clinic where you're practicing as a dentist, then of course there's lots of education and training and formal credentials that you need in order to be able to start that business and operate that business. But there are plenty of businesses that you can start without that type of institutional education. And the next requirement would be money. Of course, you're going to need some money to start a business. It might be a little bit, like a few $100s. It might be a lot, like a few $100,000. But again, there are plenty of businesses that you can start even if you don't have a lot of money. So don't feel like you are limited and you can't start a business just because you're not sitting on, $100,000 or $1 million in your bank account. And then another requirement would be experience. And now this depends. You have to start somewhere. If you've never operated a business before, you have to start at some point. You're only going to learn those things once you start doing it. There are things in business that you can't learn until you get hands-on experience. But again, don't feel like you can't start and manage a business if you don't have any of that experience. It can be really valuable to have experience in the field in which you're starting a business around. So if you're starting a construction company, of course, it's going to be very valuable if you know how to do construction. Or if you're starting a cleaning company or a bookkeeping company, that you already know how to perform those tasks. That is going to be very valuable. But probably the most important requirement for a business owner is motivation. You really need motivation and you need discipline. You need to be willing to make some sacrifice and work hard to get the business started. It's going to be uncomfortable at first, but if you're really motivated, that's just going to help you get through all the steps that you have to follow in order to successfully set up a business and operate a business. Now, step one in starting a business, the first thing you want to do is choose a business idea. So that business idea could be based on something you're passionate about. Maybe you really like playing tennis and you want to start a business coaching tennis. Or maybe you really like yoga and you want to become a yoga teacher. Or maybe you just love cleaning and you're great at cleaning and you want to start providing that as a service, or photography. There's so many different hobbies that can be turned into a business. Some people even have YouTube channels where they're just unboxing different equipment or doing reviews on different products. It's a lot easier these days to turn a passion into a business than it ever was before. So that can be a great option for starting a business. Another option would be something you're experienced in. So maybe you've been a plumber for 5 years or an engineer for 10 years, or you've been doing window cleaning for 15 years or something like that. If you already have that experience in that field, it makes it easier to start a business based around that because you already know what you're doing in terms of providing the service or creating the product. So that can be really valuable. A lot of times people have worked in a field for a long time and they just want to break off and do their own thing, or they've worked for someone and they feel like they could do a better job of starting their own business. So that could be a great way to start a business as well. And then thirdly, a need or trend that you see in the market. So maybe you're into technology and you're just seeing things shift. You're seeing something like 3D printing take off and you want to get involved in that and start a business around it. Or maybe there's a need that you see in the market. Maybe in your town, your municipality, maybe there's a lack of daycares. And maybe you never had any plans to start a business or start a daycare, but you really see the need for it and you feel like you would do a good job. That could be a good motivator and a good idea to start your own business. Now, the second step is choose how to start. Once you've come up with an idea, you have to determine the starting method. So is that starting a new business from scratch? Something that doesn't exist whatsoever. You're totally building it from the foundation. Or are you purchasing an existing business? Sometimes that can be a good option and a bit of a head start for something like a restaurant. Maybe you don't want to go through all the steps of starting that restaurant, so you can look around and see if there are any restaurants for sale that you can take over and make them your own. That can be a good option. And the third option would be become a business franchisee. So kind of similar to purchasing an existing business, where becoming a franchisee, you're maybe taking over a location or starting a new location for an existing franchise. And we're all familiar with big franchises like McDonald's and Subway and A&W and things like that. There are a lot of restaurants where you can become a franchisee, but there are also other different types of businesses like gyms or fitness centers, moving companies, cleaning companies, hair salons, retailers. So this can be a good option as well. And there are trade-offs to all different types of these. It really depends on your goals, your preferences, your situation, and things like that. Now, the next step, step 3, is develop plans. So you want to gather information and be strategic before making anything official. You don't want to jump right into it without thinking about some of these things here. So one of the first things you'll want to do is estimate your expected startup costs and operating costs. So startup costs meaning, what are you going to have to pay for in order to get the business going? Are you going to have to buy some equipment? Are you going to have to do some renovations on a property? Are you going to have to pay a rent deposit? Are you going to have to pay some legal fees to get the business set up? Are you going to have to buy some supplies or pay for some training for employees? Things like that. And then operating costs, those are different from startup costs. Startup costs are typically one-time costs to get the business going. And then operating costs are the ongoing costs that you're going to be paying regularly to keep the business running. So that might be things like monthly rent or annual insurance or utilities for a commercial space or wages for employees or things like that. Next, you'll want to conduct various forms of research, just kind of figure out what the market is like, what the requirements are like, maybe competition and things like that. And then determine feasibility. You might have a great idea, but is it possible? Is the physical facility or the property available? Do you have the money to be able to start it? Do you have the capacity? Or are you just too busy to focus on building this business? Are there enough skilled laborers or laborers available to serve as employees for your business? So you want to make sure that it's reasonably possible before you move too far in the setup and the planning of the business. Next, you might want to write a formal business plan or have a roadmap. It's really good to document your ideas and just think about the different components that go into starting a business so that you're aware of everything you need to take care of. Next would be meeting with professional service providers. So you might want to meet with a lawyer, especially if you're incorporating. You might want to meet with an accountant to determine tax strategy and what's the best startup method for you. You might want to meet with business consultants to navigate things like business licenses or legal structures or funding options. And so just a quick list of some of those things you might want to think about when you're developing plans would be the timeline. When do you want to open? When do you want to register your business? Things like that. When do you want to start serving customers? Location, where are you going to be based? What type of facility do you need? With the facility, is that a work from home type of home-based business, or do you need an industrial or a commercial or retail space? Who is your target market? Who are your suppliers going to be? Where you're going to get your products from, or services that you require to start and operate the business? What are your advertising methods going to be? Are you going to need employees? And if so, how are you going to get them? What are your prices going to be for your product and or services? And what are your products and services going to be? What are your offerings going to be? What do you really want to focus on providing to the market through your business? So these are all good things to consider when you're developing plans to start a business. Next is choose a legal structure. So every business must operate under a legal structure for their business. Some of the main ones would be what's called a sole proprietorship. So with sole proprietorship, just think of the word sole or solo means one or individual, and proprietorship, like proprietary, means ownership. So a sole proprietorship is a form of legal structure. It's a very simple legal structure where there's just one owner, a sole proprietor, single owner. So it's an unincorporated business, and it's often the easiest one to set up and the easiest one to maintain, but it is limited to just one owner. Another option for legal structures would be what's called a partnership. And now a partnership is very similar to a sole proprietorship, where the business is tied to a human owner. But the main difference between a partnership and a sole proprietorship is that a partnership can have two or more owners. So sole proprietor is just for one, and partnership is two or more, and it's an unincorporated business and it's just registered to multiple human entities. Now, a third option that's really common is what's called a corporation. And a corporation is a separate legal entity. So that's a form of legal structure where it's separate from the human owners that operate the business, unlike a sole proprietorship or partnership where the business is very much tied to those human owners. There are other legal structures that are available, although these three are the most common. Other ones would be things like a cooperative, which is a specialty form of corporation, LLP, which stands for limited liability partnership. There are professional corporations, which is another form of specialized corporation. And then in Canada, we do not have LLCs, which stands for limited liability company. This is a form of legal structure that exists in the United States, but not in Canada. So for these three, sole proprietorship, partnership, and corporation, those are going to work for the vast majority of businesses. Some businesses might want to set up as cooperative, maybe in some cases as an LLP or a professional corporation, but those are typically reserved for certain professions and certain industries, whereas sole proprietorships, partnerships, and corporations can be applied to most different industries, most different types of businesses. So when it comes to comparing the different legal structures, first off, the unincorporated businesses like proprietorships and partnerships. From an administrative standpoint, those are typically less work and less money to set up and to maintain. They also have fewer renewals. So once you've registered a business under one of these forms, in Saskatchewan, as of the filming of this video, you just have to renew the business every 3 years with the Saskatchewan Corporate Registry just to keep the business name active and alive. With these types of businesses, there is more liability because there's no real separation between the owners and the business. So if the business owns assets, they're owned by the owners. If there's a lawsuit against the business, it's ultimately against the owners. There is no separate legal entity. There is no separation. So the liability ultimately falls on the owners. There's also limited tax strategy because the earnings of the business need to be reported on the personal income tax returns of the owner. There is no separate tax return for unincorporated businesses like sole proprietorships and partnerships. There's also limited ownership in the sense that it's a little bit harder to change ownership. If you start a business as a sole proprietorship with just one owner and you want to turn it into a partnership, it's not an easy transition just to switch it. You have to go through the process of closing down many of the accounts and then reopening them or re-registering them, or at least transferring them into a partnership. Or likewise, if you start a partnership with two people and then one of the owners wants to leave the business, you have to cancel a lot of the accounts, close different things, transfer different things, and switch it over to a sole proprietorship. So in some cases, it's not very fluid when it comes to changing who the owners are. You also can't sell a sole proprietorship or partnership in its entirety because it is so tied to the human entity. You can sell the assets and hand over some of the things that have been created, some of the infrastructure, but you can't really sell it in its entirety like you can with a corporation. So when it comes to corporations and cooperatives, which again is a specialized form of corporation, they are more work and more money to set up and to maintain from an administrative standpoint, particularly when it comes to filing taxes. Because a corporation, being that it's a separate legal entity, it has a separate annual tax return from the human owners. And that tax return is quite complicated, and typically you'll need an accountant to file it, which can be expensive. It can also be more expensive to set up a corporation, especially if you are hiring a lawyer to help you with the incorporation process. Now, when it comes to renewals, if you have a corporation based in Saskatchewan, you have to file a renewal annually with the Saskatchewan Business Registry. And as of the date of filming this video, it's a $60 fee. So once per year compared to once every 3 years for an unincorporated business. Now, this renewal is completely separate from filing your tax return. It's just a way of keeping your corporation active and alive. Now, one notable feature about corporations that's different from unincorporated businesses is that there's less liability. So because a corporation is a separate legal structure that is separate from the owners, a lawsuit against the business is not necessarily a lawsuit against the human owners. It's a lawsuit against the business. The assets of the business can be owned by the corporation and not necessarily have to be owned by the human owners of the business. So there is separation there, which can be valuable for some businesses and some business owners. There also is more tax strategy. Just because that corporation is a separate legal entity with its own bank account and its own tax return, it can allow the owners to be a little bit more strategic in how they manage their money and how they transfer their money out of the corporation, as compared to if your business is unincorporated, you have to claim that on your personal tax return. Whereas with a corporation, you don't necessarily have to do that unless you start pulling money out of the corporation, either typically as salary or as dividends. And lastly, corporations have easier ownership in the sense that it's a little bit more fluid to change ownership. Because with a corporation, it's not so tied to the human individuals who own it. Those individuals become shareholders and they're owners because they own shares in the corporation. So you could start a corporation with one individual as a shareholder, and then if a partner wants to come, you don't have to close anything down or re-register anything. You just have to issue shares to that new owner. And if that secondary owner stays for a while and then they want to leave the company, you can just buy back their shares. So it's a little bit more easy to transfer ownership. Or even if you want to sell the business, you can sell it in its entirety because it is a separate legal entity, and all those accounts that are registered to the corporation can typically just be transferred to the new owners because they're taking over the entire corporation. So step 5 is choosing a business name. And it's important to choose your legal structure before you choose your business name because there will be some implications on the business name based on the legal structure that you go with. One important note is that you can use your personal legal name for a sole proprietorship. So if you're not incorporating and you just want to conduct business under your personal legal name and you don't want a business name, that's fine. You're able to do that and then you don't have to register a business name. Whereas if you are going to go with a business name and market yourself under a business name, then you need to register it, and there's certain criteria that you need to meet in order for that business name to get approved. The first criteria that you need to meet is that it needs to be distinctive. So that business name has to have something that separates you from other businesses. It could be your last name or your first name or a word that you chose like classic, or it could even be a word that you created. You know, Accenture is a business that just came up with a word that wasn't actually in the dictionary. So all of those can work. It's mainly just to separate you from other businesses in the same field or similar industry. The second criteria you'll need to meet in order to get the business name approved is that the name needs to be descriptive. So it needs to, in some form, explain the type of business. What is the industry? What is the nature of the business? So for example, that could be plumbing, cleaning, marketing, construction, consulting, things like that. And then thirdly, in the case that you're incorporating, you need to choose a legal ending to indicate that it is a corporation. And there are several different options. In Saskatchewan, there are 6 different options in English, and you can also choose the French ones. But these are only required for corporations to communicate that they're incorporated, and you cannot choose one of these legal endings if you're not incorporated. So those legal endings in English being LTD or limited, INC or incorporated, or corporation or corp. So the 6 main options, they all pretty much mean the same thing. It's really up to you which one you want to go with. But once you choose the legal ending, that becomes part of the official name of the corporation. Now just some examples here on business names. So you have the first column, distinctive terms, the second column, descriptive, and then the third column is legal endings. So for example, Classic Plumbing Ltd. We have Classic as the distinctive, separates it from other plumbing companies. We have plumbing as the descriptive, which tells us the nature of the business and what industry they're in. And then we have Ltd, which is an indicator and a legal ending to show that it's a corporation. And then underneath that, Urban Cleaners, we have Urban, the distinctive, and Cleaners, the descriptive. So the criteria is met there, and that would be a business that's not incorporated because it doesn't have one of those legal endings in the business name or the legal name of the business. Next step is step 6. Do a little bit of market research to continue with your planning. So more specifically, you want to do some research on the industry. So find out things like the size of the industry. Are there any regulations? Are there any special permits or licenses you need? What are the trends? Is this a growing industry? Is it declining? Important to be aware of some of those things regarding the industry that you're getting into. Another thing to research would be doing some market research on competition. So find out information about competitors or similar businesses. What are the services or products that they're offering? What are their prices? What are their target market? Have they been around for a long time? Does it seem like it's sustainable? That would be a good thing to research, and maybe make sure there's not too much competition in your region. Of course, if you're doing something unique, sometimes that's okay if there is a lot of competition. But if you feel like your target market already has a saturation of offerings in your industry, that's going to make it more challenging to start a business and make it a successful business if you're fighting for market share when there's already lots of competition in that particular field or that market. The next thing you want to research is clients or prospective clients. So research your ideal target market. Find out the size. How many people are in that target market, especially in the region that you want to target? What are their needs? What are their preferences? What's trending for them? What's changing? What could you see happening in the future? It's really good to ask those questions and do that research. And in Saskatchewan, we have a valuable resource, an organization called the SAS Startup Institute, and they can help providing market research on some of these topics that have just been discussed. So you can reach out to them, and they do have some free reporting and research that they can provide for businesses in Saskatchewan. Step 7 is choose a location. So determine your business location before beginning operations. Are you going to operate your business from home? Do you rent a home, or are you going to buy a home, or do you already own that home? How is that going to work if you need to have client visits or if you're selling products? What are the zoning bylaws of the neighborhood and the region that you live in? So these are all really important to be aware of if you're going to have a home-based business. But having a home-based business can be a great option for a lot of different types of businesses, especially starting out. Secondly, maybe you want to have your business in an office where you're renting an office space. Maybe that's an entire exclusive office space, or maybe you're just renting a room in a shared office, or maybe you are in a situation where you feel like you can purchase your own office building. Both of those can be options. For client visits, having an office space is generally a little bit easier than having client visits out of your home. So if that's important to you and you're going to have a lot of client visits, that could be something to take into consideration when choosing where you want to operate your business out of. And with offices, again, they can be separate or shared. So sometimes you can just rent a room and share, common areas like a boardroom, or other times you can rent out a whole office facility where you have exclusive use to it for your business. Next would be a retail location. So if you're planning on selling products especially, then a retail commercial space is probably going to be a better fit in that case. And with retail, just like with a home-based business or with an office-based business, retail spaces can typically be available to purchase or for rent. So you can determine what makes most sense for you. It might be starting out that you want to rent, and then later on as the business grows, maybe you want to purchase your own commercial space where you can operate that retail business out of. Really important to be aware of zoning bylaws and building code if you are taking over a retail space. You don't want to run into a situation where you sign a lease for a commercial space and then find out that the region in which you're renting from is not zoned to operate the type of business that you're planning to operate, or that it's not up to code, or that permits were missed for different renovations or construction that were done on the property in the past, or ones that you want to do in the future. And it's also important to be aware that if you are renting out a retail space, whether that's for selling clothing or having a restaurant or anything like that, that there's likely going to be renovations known as leasehold improvements if you are leasing the property. So there might be some extra money and planning and time that has to go into preparing that space to make it suitable for your business. So you want to make sure that you take that into consideration. Another option would be an industrial space. And now this would be obviously more useful for businesses that are more into industrial industries like manufacturing. And the same thing with industrial spaces, you can rent or buy them. And important to be aware of zoning bylaws, because if you are doing something like manufacturing, you want to make sure that you're in a region in your municipality, at least in a zone or neighborhood, that allows you to conduct that type of business and that type of manufacturing in that particular location. And then lastly would be a remote business. Now this is an option for a lot of different businesses, especially businesses that are focused online and don't necessarily need to be anywhere physically. You still need to register to a Saskatchewan address if that's the case. Maybe you're doing some consulting or some coaching or some graphic design or web design or something like that, that allows you to work from different locations within Canada or outside Canada. That's fine. That can work really well for some types of businesses and some type of people. But again, it still needs to be registered to a physical address in Saskatchewan. And if you're looking to find spaces that are available, whether that's office space or retail or industrial, realtor.ca can be a good option, where there's a bunch of commercial listings on there, both for rent and for sale. Facebook Marketplace often has listings as well for commercial spaces for rent. And then there are different real estate brokerage websites that also have listings for commercial spaces, both for rent and for sale. Now, step 8 is determining your startup costs. So you want to go into more detail, figuring out what these startup costs are going to be before you take any major steps in your business. So when it comes to startup costs, it'll be things like registration. Once you've figured out your legal structure, you'll have a good idea as to what it costs to actually register that business. And then a business license. Most businesses will need a business license, so you can factor that in. Equipment, machinery, vehicles, very important to list those in an itemized list. Maybe you need a website and you're going to hire a professional web designer to build a website for you. You can write down that cost as well. Maybe you need a graphic designer to design a logo for you. Maybe you're going to have some initial advertising, like buying some business cards or some signage. Maybe you need some training, either for yourself and or for some employees. Maybe you're hiring a business consultant to help you navigate these steps, and you're gonna have to pay some fees for that, or accounting and legal to get things set up. Maybe you're hiring a lawyer to incorporate. So really good to write down an itemized list of startup costs so that you're aware of what it's gonna cost you. And then lastly, things like improvements or renovations, especially if you're renting out a commercial space. Maybe you need to install some new flooring or do some painting or add some shelving. Things like that are really important to be aware of. The next step is step 9. So that is determining how to fund the business. So once you have a clear list of startup costs and you feel like you have an accurate estimate in terms of what it's going to cost you, then you can figure out how you're going to get that money. Is it just going to be, $700 to start your business? And maybe in that case, you can fund that purely from your savings. Maybe it's going to be $7,000 and maybe you can fund it mostly from your savings, but you're going to need some money from other places. Or maybe it's going to be $70,000 or $700,000, and that's going to be a lot more difficult just to fund from savings. And so you're going to have to get creative and find different ways to get that money to start the business. Some of those different options could be family or friends. Sometimes they're the most generous and want to help you out. Of course, be careful with that, because if you are borrowing money from family and friends, you want to make sure that you have clearly communicated the conditions and when you're going to pay them back, and if you have to pay interest and things like that, because you don't want to harm those relationships. Again, it could be a really good way to get money, but it could also be detrimental to the relationship if you don't navigate it appropriately. Another option would be a line of credit. A line of credit is a form of credit, and that can work really well in some cases for starting a business, and also be useful for operating a business and just using it as a reserve fund if you ever need some extra money outside of what you have in your cash reserves in your bank account. Another option, and one of the most common options for funding a business, would be a business loan. And so those are really popular if you're needing to buy equipment and machinery and do renovations and things like that. Another option would be investors. In some cases, especially in some industries like technology, investors are more interested in helping startups. Or grants. For certain industries, certain demographics, there are grants available for startup and for expansion of businesses. And then another option that can be useful if it's navigated and used appropriately can be a credit card. Credit cards obviously have a high interest rate, but if you're just using them very short term to make some purchases for your business and you can pay them off before you're actually incurring any interest, they can be a useful tool in the startup and the operation of a business. Now, if you are going to apply for a business loan, there are things that you need to be aware of, and you want to make sure you prepare early. So by preparing early, you'll want to talk to prospective lenders, you want to check your credit score, make sure you can maximize your credit score, make sure you're not making any purchases or significant life changes before applying for a loan, especially ones that can be detrimental to the process of actually getting that loan. But if you are going to a lender for a business loan, typically they're going to look at certain criteria, and what they're looking at is what's called the 5 C's of credit. So the first C stands for character. So they're going to look at things like your personal credit score, your net worth, your background, your experience, your expertise, and things like that. Because in large part, they're lending you money. Even though it's for their business, they're basing it on the type of character, the type of skills and background that you have. So they are taking some risk and betting on you that you're going to be able to start and operate a successful business so that you can pay them back. The next C is capacity. So they're going to look at your capacity, which is your ability to repay the loan. Do you have some contracts lined up? Do you still have income from a full-time job that you're still working, or a part-time job, or maybe your spouse has a really reliable income source, or things like that? They want to see that you have a really good chance to be able to pay back the loan. It makes it less risky for them if they can see that you have good capacity. The next C is capital. So they want to see that you have some initial investment provided. If you've determined that the total cost to start up your business is going to be $80,000, and you go to a lender and ask for all $80,000, they're not going to give it to you because they don't see that you've invested and that you're taking any risk. And it looks like they're taking on all the financial risk, which is not favorable in the eyes of a lender. So typically they want to see that you're contributing 10% of the startup cost minimum up to maybe 25, 30 or more percentage, depending on the lender that you're going with. Conventional lenders are a little bit more strict with the contributed capital that they require, whereas there are some specialty lenders that will allow you to contribute a little bit lower percentage of the startup cost. But very important to have some of your own capital to start the business if you are looking for a business loan. The fourth C is collateral. So do you have any assets to tie to the loan? This is not mandatory, but it can be helpful, especially if you are purchasing land or buildings or equipment or certain supplies. Those can serve as collateral, which gives the lenders more confidence, because if you default on your loan, then there's some type of physical valuable asset that they can take and sell. And if you do have valuable collateral, it can be a way to help negotiate the loan and get favorable terms for the business loan. And the final C is the conditions. So the lender is going to look at things like what you're using the loan for. Is that just for training and advertising and it's not really a recoverable thing for them? Or is that to buy a building or to buy some equipment, which can be recoverable for them? What are the industry conditions? Are you working in an industry that's higher risk or that's declining? What's the state of the economy? Is it strong? Is it weak? Are things expanding or contracting? What are the current interest rates? They're going to choose an interest rate based on some of these conditions and also what the current market interest rates are. So very important to be aware of these before and during the seeking of a business loan. Now, step number 10 is consider writing a formal business plan. Now, in some cases, this will be mandatory. In other cases, it won't. But what is a formal business plan? It's a formal written document that contains business information, business plans, projections, research, financials, etc. Information about the owners as well. And formal business plans are usually about 30 to 35 pages. They can be a little bit shorter, a little bit longer, but that's the standard length for writing a formal business plan, especially for a conventional or specialty lender. Now, why would you write a formal business plan? To submit to lenders to obtain a loan would be the main reason, or to show prospective investors, to use as a roadmap for yourself just to document your ideas, to show to new members if you're starting a corporation or a cooperative where you're trying to recruit other members or part owners, to sign a lease. In some cases, if you're signing a lease for a commercial space, the landlord might want to see a simplified formal business plan, or just to organize your information. It's a really good practice, even if you don't need a formal business plan, to review some examples, to document your ideas, and just go through those different sections and categories in a business plan, just to make sure you're addressing everything that you need to address when it comes to starting and operating your business. Because there are a lot of things that go into starting and operating a business, and some of them can be overlooked, which can be detrimental once your business is up and running. And now, how do you write a formal business plan? You can write it yourself. You can hire a consultant or a writer, and in some cases, some lenders have templates. Some lenders will require that you have a third party write it for you. Other lenders are okay with you writing it yourself. So it's really important to speak with the lender in which you're going to apply for a business loan with, just to ensure that you can write a business plan that's suitable for them and that you meet the criteria that they're looking for when it comes to the process and the inclusions of that business plan. Step number 11 is formally registering the business. So once you've gone through this process of figuring out the legal structure and the name and doing feasibility research and things like that, then you can make it official and register your business with Saskatchewan's Business Registry, which is the ISC, which is the Information Services Corporation. And that can be done online through their customer portal. You can create an account on there if you are actually registering the business in Saskatchewan. If you're registering it in a different province, then you do that with the other province's business registry. Now, in terms of pricing, as of the time of recording this video, it's a $50 fee to apply for a business name. Once that business name is approved, then you can actually register it for $65. So that would be in the case of a sole proprietorship or a partnership that are wanting to use a business name. They would have to pay $115 total to apply for a name and then register that approved name. Now, when it comes to the case of setting up a corporation, it's a $255 fee to incorporate if you're going directly to the ISC to pay the fees. Whereas typically with a corporation, you will want to get some assistance from a business consultant, from a lawyer, someone like that, and the fees will be extra on top of that, above what the ISC would charge you. But the fee that goes directly to the ISC is $255. So in total, if you're just conducting business under your personal legal name as a sole proprietorship or a partnership, you do not have to register that with the ISC. You're free to conduct business under that name without registering anything. Whereas if you are registering a business name, it's $115. If you're choosing to set up your business as a corporation, you can do that for $255 if you're not choosing a name and you're just going with a numbered corporation name. Whereas if you want to have a word name for your corporation, then you pay the $50 name search fee. Once it's approved, then you create the corporation for $255, which is $305 total. And then you have a corporation where the legal name of the corporation is the word name that you've had approved through the name search and reservation process. Step number 12 is opening a business bank account. And it's important that this comes after registering the business or incorporating the business, because then you can open up the bank account and actually have it tied to that corporation or registered under that business name. And in most cases, it's important to set up a business bank account before getting too advanced in your business operations. So it is needed if you need a business name. So if you are conducting business under a business name, you'll want to have a separate business bank account to keep it separate from your personal financial and banking activity. But also because if you ever have clients that are writing you out checks and those checks are made out under your formal business name, then you're not going to be able to deposit those checks into a personal bank account. You need a bank account where the business name is actually registered. And again, you can do that once you've officially registered the business name with the ISC, and then take that documentation to the bank in which you're opening a business bank account with. Next is that it's necessary for corporations. So because a corporation is a separate legal entity, it requires a separate business bank account from the individual owners. And having a separate business bank account is a good way to keep your business banking activity separate from your personal activity, because it can get a little bit messy if you're running all your business activity through a personal bank account when it comes to bookkeeping. Just accounting for everything can be a little bit more complicated when you're having to filter out which transactions were for business versus which were for personal. It just makes it cleaner if you separate those transactions. Step 13 is get a business license. So obtain a license to operate your business in your municipality. So that could be a rural municipality, that could be a town, that could be a city. Very important to be aware that getting a business license is a completely separate step from registering your business. You register or incorporate your business with the provincial business registry, and then once it's registered, then you get a business license with the municipality. Sometimes these steps are confused and thought of as one step, but they're two completely separate things. When it comes to business licenses, those are issued on a municipal level. So again, your RM, your town, your city, and the rules can vary by municipality to municipality. They're needed for most businesses, and you may need a non-resident license as well if you're conducting business in a municipality separate from the one in which your business is actually located. And typically a factor in getting approved for a formal business license is that you're meeting local zoning bylaws. So making sure that the type of business that you're operating is in a location that is zoned for that type of business. Now, just an example here, Meadow Lake, the price for a business license in Meadow Lake for a home-based business as of the date of filming this video is $105. to get the first one, and then annually you pay an $80 fee to renew it. Whereas if you have a business where you're generating less than $10,000 per year in revenue, you actually don't have to pay a fee to get the business license. Or if you're conducting business from a commercial premise, then you don't have to pay a fee either. So the fee is more so focused on home-based businesses that are generating more than $10,000 in revenue per year. And again, every municipality, every town, every city, every RM has slightly different rules. So it's a very good idea to familiarize yourself with the rules of the municipality and make sure you're compliant with their business license regulations and rules. The next step is additional licenses. So some businesses may require additional licenses on top of getting their regular municipal business license. So think, for example, businesses that are selling cannabis or liquor. They need a special license in order to do that. Or restaurants need a Saskatchewan Health Authority license in order to sell food that they're preparing commercially. Or food trucks would be another example. Certain childcare facilities and care homes need some extra licensing. Taxis and transport businesses, some trades need extra licenses, and also professional associations. So some industries require practitioners in that field to be associated with a professional association, which are typically provincial. And so in order to conduct business as something like maybe an accountant or a physiotherapist or a registered massage therapist, you need to be registered and in good standing with the appropriate professional association. And now, in order to look for some of those licenses and permits and things to be aware of when it comes to additional licenses, a really good resource is a website called BizPal, where you can put in your location and your industry, and it will provide all the different potential regulations, license, permits, and things like that that you might need for your business. Step number 15 is understanding taxes. So when it comes to businesses, there are more tax obligations to be aware of. The first one is that most businesses must register for a GST account, collect GST on sales, and then remit or pay forward GST to the Canada Revenue Agency. GST is a 5% tax rate. It's a federally applied tax rate, so it's the same across Canada, and it's known as a value-added tax. So very important to be aware of as a business owner or someone who's starting a business to make sure that you're compliant with GST. Next is PST. So PST is a provincial sales tax, and every province has a different system for sales tax. Here in Saskatchewan, we have PST. It's currently a 6% tax, whereas currently in Alberta, they don't have PST. Other provinces like Manitoba and BC have similar PST systems to Saskatchewan, but also slightly different. So again, good to familiarize yourself with PST, as most businesses must register for a PST account, get a PST number, and then on many products and many services, you have to charge PST from your customers or your clients, and then pay it forward to the Ministry of Finance. So it's another sales tax, but it's completely separate from GST. Next is when it comes to income tax, unincorporated businesses must file their business activity on their personal tax return. There's a separate section on a personal tax return called a T2125 form. That's where you report revenue and expenses from self-employment or business activity. So you want to make sure that you're doing your bookkeeping and properly including that information when you file your tax return as a business owner. Whereas when it comes to corporations, again, corporations have a separate tax return from the personal tax return. It's a T2 tax return, and that must be filed every year as well with the revenue and the expenses of the business reported on that tax return. Now, when it comes to employment deductions like Canada Pension Plan, if you become self-employed and you have your own business, you have to contribute to CPP in most cases, and you have to pay both portions, both the employee portion and the employer portion. Whereas when you're working as an employee, you pay the employee side and your employer matches that and pays the employer side. But if you're self-employed, you pay both. So something that's important to be aware of. When it comes to EI, employment insurance, this is optional for self-employed individuals. It's not automatic. You can opt into a specialized version of EI if you want to as a self-employed individual. Now, when it comes to filing your income taxes, if you're setting up your business as an unincorporated business like a sole proprietorship or a partnership, again, that's just part of your personal income tax return, the T2125 form on a T1 tax filing, which is a regular personal tax filing. There's no separate fiscal year, so you can just keep your business tax year as the start of January until the end of December. The income from your business is taxed at your personal rate, so you have to pay your personal tax rate on your net income from your business. And you want to make sure that you're claiming all business revenue and all of your business expenses when you're filing your T1. Now, when it comes to filing the tax return for a self-employed individual, it's not a super complicated tax return, especially if you're familiar with how this works and you're doing good bookkeeping. There are different softwares that you can use in order to file these taxes. Some of the more well-known ones being Wealthsimple or TurboTax. There are other softwares as well, or you can hire a qualified professional to file your taxes for you if you feel like it's getting too complicated with being a self-employed individual with your own business. Now, when it comes to filing income taxes for corporations, again, a corporation has a separate tax return from the individual, and that's a T2 tax return. If you want to with a corporation, you can change your fiscal year. So rather than it being January 1st until December 31st, you could make it start on April 1st, or it could start on July 1st or October 15th. You get to choose that with a corporation, and you can change it if it makes more sense to you in the case of your business. Income is taxed at a corporate rate. So the net income from business activity for a corporation is not taxed at your personal tax rate, it's taxed at the corporate rate. And as the owner or shareholder of a corporation, you can pay yourself in different ways. You can make yourself an employee, put yourself on payroll, and pay yourself a salary. You could pay yourself out as an owner, a shareholder, in the form of dividends, which is considered investment income. Or you could do both, or you can do neither. You have more options when you own a corporation in terms of how you're taking money out of your business and how that gets reported on the income tax return of the corporation and your personal income tax return. Just like with unincorporated businesses, when you're filing the tax return for a corporation, you want to make sure that you're claiming all of the revenue and all of the expenses for the business. Now, step 16, accounting and bookkeeping. You want to make sure that you're documenting all of your purchases and keeping receipts, as well as documenting your revenue from your business. You want to record details on sales and expenses. So it's important to have both of them and not just expenses, because both need to be reported. Using suitable forms of software can be valuable. If you really wanted to, you could do your record keeping on paper, but typically using software can make that easier. It could just be using spreadsheets, or sometimes it makes more sense to use bookkeeping software. Some of the more notable ones being QuickBooks, FreshBooks, Wave, Sage. There's a bunch of different options out there, so you can just find one that makes most sense for you, or you can hire that out to a bookkeeper, and oftentimes they will have software that they can use. And when it comes to bookkeeping, it's really important to get some guidance, do some research, get some training. Maybe you just want to outsource it, but still good to be aware of how it all works, even if you are hiring a bookkeeper or an accountant to do all your bookkeeping and accounting for you. Step number 17 is hire employees. Now, not all businesses are going to have employees, and that's okay. But if you are starting a business where you want to hire employees or may need to in the future, there's a number of things to consider. If you're going to start hiring, you want to create a clear job description for the job in which you're hiring. You'll want to start advertising and recruiting, and you can do that on social media accounts. You can do that by word of mouth. You can post on different job boards like Indeed or SAS Jobs or the Government of Canada Job Bank. So there are a lot of different options for recruiting. You want to be clear with the scheduling and compensation that you're providing for the employees. You'll likely want to have a good employment contract that's signed by both parties, and then have a clear training process for that employee and for onboarding them. You want to make sure that you're setting up a payroll account when necessary and taking off payroll deductions like CPP, EI, federal and provincial income tax for those employees. And then you'll also need to get set up with a workers' compensation account to have workers' compensation insurance in most cases if you have employees or even workers in some cases that aren't official employees. So when it comes to workers' compensation, under the Workers' Compensation Board's governing legislation, the Workers' Compensation Act of 2013, all employers operating in industries covered under Saskatchewan's legislation who hire workers on a regular, casual, or contractual basis must register and create an account with the WCB. WCB being the Workers' Compensation Board of Saskatchewan. There are very few exceptions to this rule, but basically workers' compensation insurance is insurance for workplace injuries, and again, required for most businesses who have employees or even subcontractors. So even if you have independent contractors who are not employees of your business, oftentimes you still need to have workers' compensation coverage for them. Step number 19 is get insurance. So workers' compensation insurance is one form of insurance, but most businesses will also need additional forms of insurance. And some of the other forms of insurance are ones like commercial general liability insurance, or CGL, business interruption insurance, property insurance, professional liability insurance, also known as errors and omissions insurance, vehicle insurance, and maybe some additional employee health insurance coverage for extended health benefits. So every business will have different needs, and typically you can package together multiple different forms of insurance under one insurance policy that you can get through a commercial insurance broker. Now, step 20, the final step, is spread the word. Once you have everything set up, you want to focus on advertising the business and growing the business. So you might want to do things like designing a logo and developing branding for the business. You might want to build a Google business profile so that people can find you on the map and leave reviews and find a link to your website and things like that. You might want to create a website for your business. You might want to do things like design and print business cards or other advertising material, digital or physical. You might want to start going to different networking events and, connecting with other business owners and prospective clients. You might also want to do things to spread the word, like creating social media accounts for the business and start posting content, whether paid content or free organic content, on those social media accounts. And when it comes to starting and operating a business, there are a lot of useful resources in Saskatchewan and elsewhere. For example, for starting a business, we have the Sask Startup Institute that has a lot of different resources for startups. There's also Magnaltis Consulting, which has a bunch of online resources, including YouTube videos that focus on starting and managing a business. For women entrepreneurs, there's WESC, which stands for Women Entrepreneurs of Saskatchewan. There's the Women's Business Hub, based in Saskatoon as well. For Indigenous individuals who are starting or operating businesses, there are some additional organizations that can provide supports, such as CCDF, which is the Clarence Campo Development Fund, and Gabriel Dumont Institute, or GDI, which can support Métis entrepreneurs. There's SIIT, which is the Saskatchewan Indian Institute of Technology, and there's SEAF, which is the Saskatchewan Indigenous Enterprise Foundation, which can support First Nations entrepreneurs. And then there's also Community Futures, which has some supports for Indigenous entrepreneurs. For youth entrepreneurs and entrepreneurs living in rural areas, there are organizations like Community Futures that can provide supports and loans. And then other specialty organizations like Cooperatives First can offer a lot of support to cooperative forms of businesses. The Ability Hub for Entrepreneurs with Disabilities also offers a lot of support, or BDC, Business Development Bank of Canada, can also provide support and funding for businesses. If you're just wanting to learn more about business content and how to operate and start a business, there's plenty of content on YouTube. Community Futures has resources and has webinars and videos online. Business Link, they're based in Alberta. They have a lot of valuable resources. Some of them are Alberta specific, but a lot of their videos and content are useful even in Saskatchewan. And then WESC as well has different resources and webinars. WESC again being Women Entrepreneurs of Saskatchewan. If you're wanting to connect, WESC has different events. Sask Startup has different events. SIPE, which is Saskatchewan Young Professionals and Entrepreneurs, they have different networking events, as well as organizations like Chambers of Commerce for the province or cities or towns. They'll have different networking and business events as well. So there are a lot of different ways to connect with other business owners, other professionals, and get out there and network to grow your business. And now just to finish up with a quote, the reason most people fail instead of succeed is they trade what they want most for what they want at the moment. So starting a business requires some patience. It requires taking some risk. It requires making some sacrifice. It requires getting a bit uncomfortable. But ultimately, if you can stick with that and get through the discomfort, there's a lot of reward at the end of it. So just make sure that you're aware that it's not always going to be easy starting a business. There are going to be some challenges and some struggles, but hopefully it can all work out and you'll get to reap the rewards of the sacrifice and the hard work that you put into starting that business and getting it going.